Today, I will test one of the supposed best indicators any beginner trader can use, which can tell you not only what the overall trend is, but also when to buy or sell, all in one. Yeah, that's right, I am talking about the famous Ichimoku Cloud. I will test this indicator more than 10,000 times to find out what its win rate is, and you will be able to see all the real and proven results. Let's go! So, as usual, I'm on TradingView, which is the platform that I use to backtest every indicator and strategy. I've been using TradingView since the beginning of my career as a trader, and I can tell you that this is by far the best platform you can use. It's easy and intuitive for beginners, yet powerful enough for advanced users. And the best part is that you can use it for free. If you want to go further and test strategies using the PineScript tool, as I do, you can and should use one of the 3 plans that TradingView offers. I've been using the Pro Plus version for over 2 years, and it was one of the best investments I made, as the increased quality and power of the tools was what helped me to increase my performance as an active trader. So, if you want to take the next step in your trading career, as I did 2 years ago, I strongly advise you to try one of these plans. If you use the link I left in the description, you can get up to $30 free to use when getting your new plan, which is an amazing discount. For the backtest process, I will use an algo that I created. I will perform it on the daily time frame, on the 28 most common forex pairs, and using in-sample data consisting of the years 2010 to 2014, 2016, 2018 and 2020. It's the same sample setup as in my previous videos, so in the end we can compare all indicators and strategies. After that, I will also test the strategy on the 5-minute time frame to see if the Ichimoku Cloud performs well on a scalping strategy. Let's now add our Ichimoku Cloud indicator. I will use this one here, provided by TradingView. The settings that I will use are the default ones. And then I will unmark the lagging span because we will not use it today. This indicator can give 2 types of information. The first one is about the current market trend. If the price is above the cloud, we are in an uptrend, and if the price is under it, we are in a downtrend. Then we can use these 2 lines, the conversion line, the blue one, and the baseline, the red one, to know when it's the best time to buy or sell. When the conversion line crosses above the baseline, it means it is a good time to buy, and when the opposite happens, it means it is a good time to sell. So, in this Ichimoku Cloud strategy, a valid long signal is when the conversion line crosses above the baseline and the price is above the cloud. And the valid short signal is when the conversion line crosses under the baseline and the price is under the cloud. Simple as that. Also, I am going to search for the ATR indicator, and I will use it with the default settings. I use the ATR indicator to place the stop losses and the take profits on every single trade. As on the other indicators backtests, for stop losses the value will always be 1.5 times the ATR pip value, and for take profits 1 times the ATR pip value. I will now code the indicators on my algo. So, I just finished coding the indicators on my algo with the respective buy and sell orders. And another important point in my code is that it has an extra exit condition. When the conversion and baselines cross before a previous valid signal is closed, the algo will close the position that was already open and enter in the new one if all pieces of the strategy agree so. This extra exit condition will turn many full losing trades into small losses, so the overall profit will increase. Let's see if everything is okay in our code. Here we have an example of a long signal. The algo considered the entry point after the closure of the signal candle given by the Ichimoku Cloud. The conversion line crossed above the baseline and the price is above the cloud. The stop loss value is 1.5 times the ATR pip value, in this case 1.5 times 153.1, which is 229.7 pips. And for the take profit, the value is 1 times the ATR pip value, so in this case 153.1 pips. This trade will be a profitable one, the take profit was hit here. Now let's look into the short signal. The algo considered the entry point after the closure of the signal candle given by the indicator, the conversion line crossed under the baseline and the price is under the cloud, the stop loss value is 1.5 times the ATR pip value, in this case 1.5 times 138.1, which is 207.2 pips, and for the take profit the value is 1 times the ATR pip value, so 138.1 pips. This trade will be a profitable one too, the take profit was hit here. The algo also correctly respects our in-sample data. The arrows that you see are the entries and exits from every trade signal. So, as you can see, our algo is working correctly. The risk per trade that the algo will use is 2%. To point out the results, I will use the same Excel sheet I used in the last videos. I will now speed up this part of the video a little bit, but you can slow it down to see the results of every single pair. I see you in a bit. Here are the backtest results from our sample in the daily time frame, and we can see that after 2,814 trades, our Ichimoku Cloud indicator strategy has an average win rate of 58.97% and a loss of almost 30%. As such, we can see that, at least under these conditions, this indicator is not very efficient. But will the results be the same on a smaller time frame? Let's check. I will redo the backtest on the same 28 pairs, but now on the 5-minute time frame and on the max data TradingView can provide. So here are the new backtest results from the 5-minute time frame, and we can see that after over 16,000 trades, our Ichimoku Cloud indicator strategy has an average win rate of 56.31% and a loss of 625%. The results were even worse than the ones from the daily time frame. Now, for those that will comment, but Algo Trade Pro, you don't know what you are doing. You need to consider trades only from the London session, and you need to use a risk to reward of 1 to 1.5. Wait just one more second before doing it, because I will do a third backtest considering all that conditions. I will backtest all the same 28 pairs in the 5-minute time frame using a stop loss at 1.5 times the ATR pip value and a take profit at 2.25 times the ATR pip value. So the risk to reward of every single trade is 1 to 1.5. And I will quote that the algo can only take trades during the London session. Let's do it. Here are the new backtest results with all the conditions I mentioned before. And we can see that after over 6,000 trades, our Ichimoku Cloud indicator strategy had an average win rate of 38.91% and a loss of 184%. The strategy continues to be inefficient, so I strongly advise you not to use this indicator. Of course, you can and should always do your research, but I think you would be wasting time in this one. Time that you could use to test efficient indicators that I already brought to the channel. I will leave the links to some of them in the description. And for those who are successful using the Ichimoku Cloud, you don't need to be angry with me. I didn't lie and just share the real results of this indicator under the given conditions. You can know something that I don't know and therefore succeed. So keep doing your work. And that's it. I hope you learned something from this video, and don't forget to subscribe, share and like it to support me in bringing more content to you. Be well, thank you, bye bye.